Hi everyone, my name is Jackson Kinyenjui. I'll be one of your financial management trainers and consultants. Financial management is the 5th module of the 8 modules that you're covering. It's part of the compulsory or mandatory modules that you will be taking through the investment readiness program with YUNUS and WYLDE International. What we are covering today is budgeting and budgetary controls, which is module 4 of the 7 modules that we are covering. I'm sure at one given time you have been involved with budgeting either at a personal level, at a departmental level, organizational level, or even just doing your own household or personal budget. Through this session, we'll be covering the following. We'll be enhancing your understanding of budget and budget techniques. And secondly, we'll also describe the budget making process with an intention of helping you develop the competence that you need to do a budget for your organization or for your company or for your business. We would like to begin with a discussion. So take time to just look through this question, which there are 2 questions really that we're asking you. What is your understanding of a budget? Briefly describe how your organization prepares that budget. And then the second question we'll be asking you, have you been involved in the budget process for your company, and outline what you liked about that process and what you feel in your opinion could be improved. These 2 questions, just pause the video, have a discussion with your colleagues, because it will set a foundation for the discussion of the budgeting process. So we shall also be asking you a second, you've done both questions, so we can quickly say what is a budget and what is not. Sometimes I prefer with asking the question what a budget is not. A budget is not fixed, and we are saying if you need to change or adapt a budget, you can do that as long as you have done what is necessary to counteract the implications of that change. So if you change a budget in one place, remember it affects another component. So it is not fixed, it's a dynamic document. The second thing a budget is not, it's not a copy of the previous year budget with a 10% increase to cover inflation. That is not a budget. The other 2 things a budget is not, it's not an administrative process that senior management or the finance team or you as a business owner never look at. Remember, it's a continuous living document that you continually refer. It's also not an optimistic guess at what is required. You just don't throw figures and say this is a budget. So those are the 4 things we are saying a budget is not. So you might be asking, then what is a budget? So by definition, we have 2 budgets, 2 definitions, one a longer one and one a shorter one. So you can think of a budget as a financial document or even a plan that is used to project future money that you will need to spend in order to get your planned activities completed. So think of it as an expenditure plan, and in some places even how you would get the income into the business. The second simpler definition is it's an estimate or informed guess about what you will need in monetary terms to perform your required work. So think that you have a project. To be able to complete that project successfully, then you need to have an estimate of the figures. So when you come to a budget, there is a planning cycle. You begin by reviewing your past. What has worked? What has not worked? Where were there things that you could have done better? You then review your objectives. Even as you do this budget, what do you hope the budget will achieve? Combined with the project objectives. You then prepare an operational plan, and then you move to assess and estimate costs of that plan. Then you go and discuss and amend that budget together with your finance team or your finance person, and finally you implement the plan and you monitor the budget and adjust accordingly. And so that cycle keeps going round and round from where we started and ending with the implementation or amending that budget. So you can be going in your head and thinking, are we actually following this cycle as we do that? So I would want to differentiate between the 2. So you have an incremental budget, which is what I was basically defining. You look at your previous year's budget, end of year figures, and you then adjust accordingly for inflation and other known changes. So that is what you call the incremental. In zero-based budget, you start from scratch. You assume you know nothing about last year's figures, and for each of the budget, each of the line items, you then ask yourself, how much will you be spending on salary? So if it's 100,000, you don't say we paid 100,000 last year. We say, where are we beginning? So those are the 2 budgeting methods. I wonder which ones have you been using, or you've been using a hybrid, sometimes you also use the hybrid of the two methods. So you might not be leaning onto one of them. You could be using both of them. Let's take time to look at the budget making process, because one of the fundamental things we want to achieve by the end of this session is a budget making process. At this moment, I will give you a highlight, but during our webinar, we'll be able to go through this in detail. So if you look at the screen at the moment, or you look at the PowerPoint, you can see you can list your items, where you spend your money. This would be your chart of accounts, it could be salaries, it could be projects, it could be programs. So you list those from start to finish. You estimate the budget cost of those line items. That's your second one. Number 3, you prepare your budget format. Usually in an Excel, where you can easily modify, complete with formulas, and most companies have a template, so please be having a template. You can calculate the totals for each of those categories, whether it was salaries, whether it was office expenses or administrative. Make sure you have notes that will guide you when you're coming to refer, or somebody else who needs to find out what's going on, and then get feedback about the budget from other collaborators of that budget, departmental people, and finalize on your budget. You can begin this, and come the webinar, we can see how far you've done. You can just keep it very simple at a departmental level. One of the things I also would want us to look at is how do you monitor the budget. Doing the budget is only one component. The second component is monitoring your budget. And in monitoring your budget, you monitor against your targets. You had a target of, let's say, an expense for administration was 1 million. At every given quarter or monthly, you go back and say, how much of the 1 million have I spent? So in the first quarter, you'd have, for example, have spent $250,000. Are you within the $250,000 range, or are you outside? You then also report this financial data. You tell the rest of the department, or your company colleagues, or your other people, that your other departmental partners, that you are within budget or out of budget. You then do cash flow projections, because whatever has happened, it could then have affected previously what you had done. And after doing that, then you can make financial decisions. So that's a budget plan and how to monitor it. And if you follow that cycle, it will at any given time make sure that you are on the right page. So that's monitoring your budget. I want us then to just have a quick exercise. How do you keep tabs on your budget? Again, you can pause the video and have a quick discussion with your colleagues, and then come back and be ready to share within the webinar on how you've been keeping tabs on your budget and how you can improve on that moving forward. As we conclude, what is a budget summary? What is a takeaway? Involve your team in the budget making process. It's not an individual process. It is a team collaborative process. Build in contingencies in your budget of, say, 5%. You could have quoted for something, or received a quotation that at the beginning of the year, 3 months or 6 months down the line, when you go back, you find there's been some form of increment. So please build in a contingency. It makes it easier for you then not to have big budget variances. The other 2 things you need to note is review your budget regularly and learn how to flex it. When you talk about flexing, if one of your budget items or budget line items has gone over by 10%, look, is there another item that you can take down by 10%, so that the 2 10% then will balance off or cancel each other. And finally, we talk about documenting the variance and reasons for that deviation. You could have not projected something that has come up, need to get a new ISP provider, and that could have caused your overall costs to go up. I'm hoping by the end of this session, you'll have been able then to put together a budget. You can describe the process of making that budget, and you have a good understanding of the budget making process. Please go back to the beginning and look at how you can improve your budget making process. Thank you.